Alright, this is going to be a very short video, but it's going to be over trading ranges. And really, as simple as it sounds, why trading ranges are the way they are. You know, it's an interesting concept when you think about it. Let's just look at, well, this is a good example here. Huge gap down up here, and you can see we've been sideways for here. Well, I really want to just that's better. So you can see we've been sideways for about an hour, and then we got a breakout, and then we reversed up, tested here, and reversed all the way up to here, and it turned down. But why? When you really think about it, trading ranges, they don't reverse at random. They reverse at support and resistance. All a trading range does, it goes above support, it turns down, it goes below resistance. Excuse me, I just said that backwards. Let me start over. Trading ranges go above resistance and turn down, and they fall below support and turn up. Why? Well, because traders are literally fading everything. Bar one, traders know buyers below. So, any trader who sells below knows we're probably going to come back to this low, as it did here. Same thing with this bar. Traders selling here are going to get out above because they know the odds are we're going to go back to here. Traders shorting here. Well, they're selling it betting on a channel, not as strong of a short as opposed to selling here. However, the point is, any trader short down here, they're going to get out here. Why? And now it's hard to think, gee, it's a bear channel. Shouldn't we keep going down? Bear breakout. Well, look what happened at this stop entry short. The odds are we're going to close this gap. And if this is a channel, the odds are we're going to fall above resistance. We're going to go above here. We're going to go above here. We're going to test the open of the day. There's also a lot of buying pressure, so the odds are, traders just know. They know if they buy above this bar and use a really wide stop and buy more lower, they're going to make money. They just know it. Well, they don't know it, but the odds are very high. It's, just for fun, find as many trading range days as you can where you get a doji. The first bar is a doji, or you have 4, 5, 6 bars in a row that are tight trading range. Just about every time, even when you get a trend, price will test back to the open, scaling bulls in this case. So, let's think about taking always in. Take a swing trading approach, and this is honestly something that's been really difficult for me to grasp, and that is, how do you swing trade a trading range? Because it's kind of, well, it doesn't really make sense. A trading range, you want to buy low and sell high and scalp and use limit orders. So I'm basically asking, how do I swing to trade a trading range? Well, it's doable if you understand what is going on in a trading range. So, for example, say you short below 1. I wouldn't do it, but if you did, well, bear breakout, you have a reversal. reversal attempt. Most always in traders, they're going to go long here, or they're going to reverse. They're going to get out of their shorts or reverse. Well, here. Now you have a double top, second entry short. Its price is failing, so traders who bought above here are going to at least get out below because it's a trading range. Some will short below, and the ones that did were rewarded. Now here is where it gets a little easier. Any swing trader who's short here that is not just moving a stop from here to here to here all the way down, is going to get out above here. Why? Well, think about it. The reason's really simple. It's the same reason traders will get out of longs here. Traders know that limit order traders will make money. Swing traders know this. So traders know that if anyone's selling here or higher, price is going to come back to here. So you might as well get out because you know it's going to trigger and wait. Here on this bar, traders know. One second, I meant to do that earlier and I don't want to forget because I'll forget later and it's going to mess me up. Anyways, traders will buy above knowing the price is going to close this gap. Price is now retested. It's a breakout pullback short. Bulls are going to get out. They may short here, they may short here. However, this is the important part. Bear breakout, breaking below a channel, stop entries here, breakout gap. We have decent buying pressure. This bar, this bar, this bar. Bears are going to exit, bulls are going to go long. Well, here, close the gap, very weak signal bar. Bulls are probably not going to exit just because it's not a strong signal bar. It's a tight channel. We've been going down for almost 2 hours. We may try and test up to the open of the day. So bulls are going to stay long. Now, so think about it. Everything I just said earlier, price was going above resistance here and below support, falling below this, going above this resistance, falling below support, going above resistance, breaking above resistance. So we may swing up to this high, these closes, this high, this close, maybe the open of the day. So look for a stop entry that has broken above resistance, because the markets reverse at resistance and reverse at support. It just depends. The question is which resistance. So still long, not a place short here. Well, this is interesting. Price has touched this close, but it's a weak signal bar. So there is logic of getting out here, but it's really not a strong signal bar, so you're better off just waiting to see what the bears can do. And if you got out, you get in above here. Well, bull, not good signal bars. You can see traders, if a trader was flat, they'd get out, they'd get long here. But then look, you have a short, a breakout pullback short with this bar. Now another breakout pullback short. So arguably double top, lower high, major trend reversal. No, actually, maybe, kind of. If you consider this a bull trend line break to lower high. So bears are going to short below, as they did, because they know one thing. Well, one thing to do is look for gaps. One thing is stop entries. Why do you think break-even stops? When you take a stop entry and set a position at break-even, you nearly always get stopped out on a trading range. Well, for this exact reason. bears are going to use this one. They're going to use this high as a profit taking order. They're going to use it as an area to take profits. Excuse me. So they're going to short here and look, take profits here. On the flip side, swing traders are going to short. Price went one tick below this high right here, turned up. So what are the bulls going to do? Well, the bulls are going to buy above and expect price to get here, above these highs, spike and channel, get above here, and then close, go above here, and then stop out any break-even bears. And that's exactly what we did. Look at today real quick. It's really easy. It's not, well, nothing's really easy, but it makes sense when you think of it this way. Trading range day, first 4 bars. Well, what's the one thing we know? We know the trading range bar, traders who buy below this bar or buy this low in scaling will probably make money, as you can see they did here. Well, here's a stop entry, here's a stop entry, here's a breakout of this trading range. Look at the, and also I'm not going to point it out over here, but look at the breakouts. They get weaker. Big bar, smaller, climactic, smaller, big bar, smaller, 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 bad follow through, tails. Here, the odds are sellers above for a scalp. Always in traders are going to short below, stay short. Here they're going to get out for a couple reasons. We fell to a 50% pullback below the moving average, which was support, 20 gap bar. And also the odds are we are going to close this gap, close this, stop out break-even bears, and maybe test the open of the day, which I think we probably will. So, we may even go above the high again. Here's the high yesterday. I'll just draw a line right there just so we can see it. And that's exactly what we did. So, bulls, instead of buying here, are going to wait for a good stop entry. They're going to buy here, take profits here, here, and up here. Well, what are the bears going to do? Bears are going to get out here. They're going to look to sell somewhere at resistance. They want price. The bears want price to go above resistance because it tells them an area to short. So price goes above this over here, turns down. Well, bears, always in bulls will get out, always in bears will go short. And before I say it, where are they looking to take profits? I'm going to give you a hint. They're going to look to take profits above this bar. Swing traders. Why? Look to the left. Weak signal bar. Every stop entry has closed. And what I mean by close is you buy, sell below the stop entry, price goes back above it. So if you buy above here, if you sell this high or buy this low, price is going to come back to your entry. Sell this high, sell more up at the gap, you'll make money, which it did. So bears get out. Bears will get out. Bulls are looking for a test back up to here. Bears will look for a test up to here to sell. Bulls aren't going to buy this because it's not a strong signal bar. So what's the next thing they'll do? Well, they might short below here, stop up here, but it's forcing you to sell above the moving average, which could be a trap. Here, is it a good buy? Well, maybe. It's a tight, it's not really tight trading range. It's forcing you to risk more than you may make. So if we look at this, that's one time, so it's not really worth it. But if you did make that mistake, I'd go short below this bar. If you didn't know. Fair breakout. Well, what do we expect when we see this fair breakout? We expect it to fail, price to get above, to this gap to close, and when we fall below here, this gap to close. Well, notice this. This is one thing I forgot to mention. Here is a breakout from yesterday's end of the day breakout. Well, broke above, what's a likely thing in a trading range? We may fall below. Two-legged pullback. We finally fell below support, which is why bulls will buy. And we've been going down for about 3 hours, roughly. 2 decent legs down, so we may. Here, we're probably going to close this gap, go above here. Stop out break-even bears, stop out these break-even bears. Maybe test up to here, maybe test back to up to the day, which is why Al during the day was saying he's looking to buy. So, alright, my voice is getting a little tired, so I'm going to wrap this up. Your traders are long. It makes sense to get out here. Why? Well, spike, channel. We're at the top of the channel. We're back at the open of the day. We broke above yesterday's high and we're failing, so get out. But if bears get out, bulls get out, bears get back in. Excuse me. Bulls get back in. If bears short, they get out above. And we're getting a breakout. Well, we broke above the high of the day and we're turning down. So bulls get out. It's a low 4 short. Double top. Leg 1, leg 2. Low 1, low 2. Bull break out of a double top and another double top. Low 1, low 2, so it's low 4. Well, trading ranges, we have an obvious gap. Do you really think it's going to stay open when the market looks like this? No, probably not. So short below. Are you really going to buy here at the top of the trading range when you expect another leg and probably to close this gap? Of course not. So notice here, weak signal bar, and we're turning up right above obvious support, this gap. Trading ranges are always trying to trick you to do the wrong thing. Really, the reason this did this, because bulls are buying below and they're scalping out when the price gets back to here. It's also this high and this higher is actually 2 points, so bears sell above, sell 2 points higher, make money. And another thing, bulls buy below here, and you can see price went 1 tick above this stop entry. So, stopped out break-even bears, if you will. Finally, price closed the gap. So here, where it makes sense to get out. Makes sense to get out on this close. So what's the next thing you expect? Well, spike pullback channel. We may touch top of the channel. We'll probably at least touch this low. Well, hard to really buy because it's late in the day and sideways, but expect price to close this low. So I hope this makes sense. To review it, always in short below, bulls get out here, bears get out here, bulls go long, bulls get out below, bears short, bears get out, maybe bears short, really not that great, bears probably short here, they stay short, maybe they short here, bears get out above, that's support, bulls get long, maybe below here, maybe above here. Maybe they get out below low too short, but then if they do, they got to buy somewhere, so maybe it is closed. And bulls get out below, bulls buy again, bulls get out below. Bears probably short here, this close above this high. Maybe they get out above, but if they do, they got to short below, and they get out somewhere in here. And that's really it. So, alright, hope everyone has a great day or a great evening.